Hello, everyone. Welcome to Smartkarma's Webinar Wednesday. I'm Michael Tegos. Today, I'm pleased to welcome back to the webinar Mio Kato to discuss Koei Tecmo and Capcom, two Japanese video game developers and publishers that have a long history in the sector, both in Japan as well as globally. Mio is the founder of LightStream Research and has over 15 years of experience analyzing Japanese and Asian stocks, focusing on cyclically driven sectors such as gaming, factory automation, and automobiles. Mio, thank you very much for being with us today. We can press start on this presentation right away.
Sure. Thanks for the introduction, Michael. So, as Michael mentioned, I tend to cover a lot of cyclical stocks, but for the last year or so, I've been pushing the gaming sector quite a lot. So, probably the four main stocks that we've been pushing have been Koei Tecmo and Capcom among the small cap names, and also the two big ones, Nintendo and Sony. All of the stocks have generally done quite well and probably have been the best performers within the industry overall, which has been pleasant. But now that the stocks are up a lot, Capcom and Koei Tecmo are both up more than 100% in just over a year, and Nintendo and Sony likewise have been on the order of 40-50% up, depending on when you measure. But what we want to look at today is to examine Koei Tecmo and Capcom and try to identify whether the names are worth sticking with going forward. We think there has been a lot of momentum within the sector, but earnings have grown, valuations have grown more. So we're now in a situation where the overall sector still looks quite attractive in terms of the growth potential, but multiples have gone from being sort of moderate to being slightly on the expensive side. Not ridiculous like some sectors have gotten to be the current market environment, but nevertheless, they're not terribly cheap either. So we think it's worthwhile just being a little bit more selective within the sector. And in a lot of cases, what we're currently looking at is more where we should sell some of the best performing names and how we should concentrate the remaining long bets among the names that we still like. So broadly, we feel that Koei Tecmo is probably about due for a breather, whereas for Capcom, we feel that their momentum into the next 2 quarters is going to be really phenomenal. So it makes sense, we feel, to rotate from Koei Tecmo into Capcom. And yeah, we feel that going forward, it's not going to be so much about owning all of the stocks that have done well over the last year or so, but we feel that some rotation is worthwhile. This isn't the main topic for today, but we also feel some of the other laggards may also be worth looking at over the next few quarters, although that's something we'll probably post on Smartkarma as time goes by. So the main things we want to go through today are one thing which we feel is being emphasized more but still isn't totally understood, and that is that for gaming, it's not just a top-line issue. There's been significant improvements in the profit structures of the companies. So the sector in general is quite cyclical, but this improvement in profit structure does have significant implications in terms of how much downside there could be as the sector rolls over, as well as the potential upside in terms of the maximum earnings that could be hit as the upside cycle takes place. So we think that is worth revisiting. And aside from that, we just want to go through very quickly our previous theses on Koei Tecmo and Capcom, how they worked out, and what we expect over the next quarter to 4 quarters, and how we would be positioning ourselves going forward. So to start with, going through the earning structures, what we've been emphasizing throughout our insights is that gaming is becoming extremely profitable. In the case of Koei Tecmo, the company has always been extremely profitable, so it's not known as one of the more established or flashy developers. Their titles generally don't sell as much in terms of volumes. In a lot of cases, they don't even sell 1 million units. But the company has always had excellent cost control, and so it's always had a very high marginal profit ratio for its gaming software, and we measured it at about 67-70% between 2012 and 2016. They stopped disclosing the breakdown between their mobile and package games in 2016 in terms of the profitability. So we don't have a read after that, but this is already at a very high level, and we believe it might have increased slightly, but we don't think that they have benefited from the shift to digital quite as much as some other players. So Koei Tecmo is a bit of an outlier, but in a sense, since they've always been profitable, this thesis applies to them more from the perspective of the company actually managing to gradually move from being sort of a more second-tier player to actually being able to generate titles that sell multi-million units. And that has been a development that's started maybe about 4 years ago with the release of Neo, but it has accelerated recently, particularly because of their partnership with Nintendo, which we will discuss later. Capcom is one example of how profitability has increased significantly. This is a scatter plot of the revenue and operating profit for their digital content segment. As you can see, the most recent quarters, which have always all been highlighted in red, have been significantly above the historical trends. So for a given level of revenue on the x-axis, the operating profit generation on the y-axis has been significantly higher. We'd highlight 4Q FY20 as an anomaly. We believe that Capcom pulled forward significant costs in that quarter to give themselves a lower hurdle to beat for this year in terms of generating operating profit growth. We think that was just conservatism, but that's why we think 4Q FY20 looked slightly weak compared to the other quarters. But as you can see, the recent trend has been towards extremely high profitability. And we think that has been driven largely by the shift to digital content. What this has meant is overall higher profit margins due to the lack of giving up margins to retail. But there is another factor, which is that extremely popular titles can continue to sell over a long period of time. Whereas when distribution was done through physical stores, there was always a shelf space problem, and in particular for games where titles used to sell about 90% of their volume typically within the first week or the first month, there was little incentive for retailers to continue stocking older titles because the level of sales was relatively low. Now that that isn't an issue, with online being a significant channel, companies can continue to milk titles that they have released previously. And in that case, aside from whatever commission they pay the sales platform that they use, it's essentially pure profit. So this has contributed significantly to the transformation of the profit structures of these companies. And Capcom in particular has benefited because in the last few years they've released extremely popular titles such as Resident Evil 2 Remake, Devil May Cry 5, and their most successful title, Monster Hunter World. All of these titles continue to sell in reasonable volumes despite the fact that they were released more than a year ago. In some senses, this kind of mirrors Nintendo, which has also seen some evergreen titles. Mario Kart 8 Deluxe is one example, which continues to sell at almost new title volumes for any other developer 4 years after its release. So Capcom's not quite that strong, but they've certainly taken advantage of the evolving profit structure in the industry. Nintendo is another example that we're pointing out. So again, the recent quarters are highlighted in red. You can see that, once again, they're far above historical trends. The gap might not look quite as exaggerated as for Capcom, but obviously given Nintendo's profit scale, in terms of the absolute amount of profit, it dwarfs the difference for Capcom. One reason that Nintendo's jump in profitability has come a little bit later than Capcom is that we feel they were a little bit slower in terms of raising their digital ratio. Last year, they released Animal Crossing, which was a mega hit and has now sold over 30 million units. That appears to have boosted the digital ratio significantly. It was launched in 4Q FY20, and as you can see, since that time, the gross profit generation has been on a slightly different level compared to historical trends. So this is something that's happening across the industry. You can also see it with Sony. So in this case, it's a little bit more difficult to see. We have tried to highlight things in as visually a clear manner as possible. So the reason we've highlighted these two ovals is that in the third quarter, you tend to see a lot of discounting on software, but also Sony, its hardware sales are not as profitable. In a lot of cases, they've subsidized hardware sales, particularly for the new PS5. And so you can see the bottom right oval, that's generally third quarter numbers. And you can see that for a given level of revenue, profit generation is not very high because of the discounting and the low profit hardware sales during that quarter. However, if you restrict yourself to just looking at first, second, and fourth quarters, as you can see, recent quarters have been trending very significantly above previous levels of profitability. And if you look at the top left bubble, in terms of the marginal profit ratio, it's actually extremely high. So we don't feel that the sell side is looking at this properly and has properly assessed exactly how profitable Sony's gaming segment now is. Gaming segment is driven heavily by subscriptions to PlayStation Network, PlayStation Plus, and the profitability of that is, of course, extremely high, and Sony at the same time benefits significantly from the digital shift, where it's actually ahead of Nintendo in terms of raising the proportion. So even in the third quarter, we feel that the overall profitability was kind of masked simply because the PlayStation 5 was extremely popular, but Sony comments that its impact on profitability has essentially been neutral because there is subsidization of the actual PlayStation 5 units, but some moderate profitability from a lot of the accessories and peripherals. So net-net, there's barely any profit contribution, but there's a large revenue contribution. So it looks like margins have come down, but that's not true for the software side. And since it's the software side that is likely to drive profitability, we think that Sony is going to surprise the market a lot in terms of its profit generation over the next year. And we don't think that's in the share price yet. Because the way analysts typically look at revenues and operating margins, you generally do not get the same picture as you would from a scatter plot, which we feel is a better way of actually assessing profitability. Moving on to Koei Tecmo. What we feel is important to note about the company is what has driven its performance so far, especially over the last 1 year, has been an extremely successful collaboration with Alibaba Games. Koei Tecmo has always had an IP called Romance of the Three Kingdoms, which is essentially based on Chinese historical characters. And because of their ownership of that IP, they actually struck a partnership with Alibaba to develop a strategy game for mobile using that intellectual property, where Alibaba Games actually did most of the development and Koei Tecmo just earns a royalty on this. However, the game was extremely successful and it has proven to have legs. It has been consistently within the top 5 rankings in China in terms of mobile game grossing, and there's no real sign that this is going to drop out. Strategy games, particularly of this type, the name is Sangokushi Senryakuban in Japanese. Games of this type tend to attract very loyal players and tend to have a very high average revenue per paying user. So we expect this revenue contribution to continue for some time. At the same time, Koei Tecmo has also been strengthening its own console game development, and it had a successful title called Neo, which is an action game. That title sold about 2 million units, which was a high for Koei Tecmo. They followed it up with Neo 2 last year. That title also looks to be on the way to sell more than 2 million units. We recently checked the progress of that title on Steam, which is just on PC. It doesn't measure console. But at least in terms of the number of reviews it's received, it's higher during its first month than Neo's PC release was. So momentum for that title is looking relatively good. It had looked relatively flat compared to Neo 1, but it seems that things have picked up. The title is also released on the new PS5 and Xbox Series X, so we believe that will contribute, although the size of impact is not quite the same as their collaboration with Alibaba. The most recent positive has actually been a title called Hyrule Warriors, which is a collaborative title using Nintendo's Zelda IP. This title is based on a action battle type game system, which Koei Tecmo uses both for its own IP called Dynasty Warriors, as well as Koei Tecmo sometimes reskins this game type, where they might just have another battle action game just using Marvel characters instead of their own characters, or some types of anime characters. And they've been doing this for some time, and it's a relatively low cost but profitable way to make a game. But unit sales are not very high. It's very rare for these titles to hit even 1 million units. However, the most recent collaboration with Nintendo was quite involved, and in particular, they tied in Koei Tecmo's title to their own Zelda series by essentially providing backstory to some of their Zelda RPGs through this Hyrule Warriors title. So that has gone extremely well, and this title has sold 3.5 million units already. It was released at the end of November. We believe it has the potential to sell over 5 million units. So that would mean that this tweak to the business model has generated 5x the sales. We've spoken to Nintendo, and they're also very pleased with the results. It's not something where they can easily adopt this model to other IPs, but they did express an interest in trying to do it where they feel that it can work. So we feel that this is not a one-off Koei Tecmo. They can probably repeat this in future as well. And what it does do is it demonstrates the ability to actually have a successful title and the ability to monetize IP significantly if a little bit more thought is put into exactly how you develop these games. A lot of the time, they're just relatively low effort cash-ins, but what the Nintendo example shows is potentially investing more time and effort in these games can lead to significantly better results. It remains to be seen whether other IP owners will be willing to do that and whether the results will be similar, but this does open up a significant opportunity for Koei Tecmo. So that does improve its long-term position. In terms of the near-term outlook, we'd like to note that because of the success of Sangokshi Senryakuban in China, Koei Tecmo actually managed to strike another collaboration with Tencent, and they're developing a battle action game also based on the Romance of the Three Kingdoms IP, which Sangokshi Senryakuban is also based on. So what we'd highlight is simply that Koei Tecmo actually helped Alibaba Games put itself on the map, since it hadn't had a title that was able to stay in the top 5 prior to its collaboration with Koei Tecmo. We believe Tencent has also taken notice of that, and obviously the IP, just given its ties to Chinese historical characters, will continue to be extremely popular in China. We don't feel that the Tencent title is likely to have quite the same success as the Alibaba title, simply because of the type of game. Perhaps it could be a top 10 game, perhaps it would be more top 20 or top 30, but we do feel it can incrementally contribute to earnings growth. One important development to understand is that following the success of Neo, which sold 2 million units, Koei Tecmo has been planning how to turn itself into a AAA title developer, a developer which can produce IP that can sell 5 million units or more. And they were originally planning to release their first title of that nature in this fiscal year. They actually delayed that into next fiscal year. The company said this was because they wanted more development time, but we actually think it's simply because they've had so much success in terms of earnings, both with Hyrule Warriors as well as with the collaboration with Alibaba, that they simply didn't want to set too high an operating profit hurdle, and that's why they delayed this title. We think that's a somewhat common occurrence within the gaming industry, simply because there is so much earnings volatility and the market tends to reward steady earnings growth. So we actually have high hopes that this title could indeed sell 5 million units, but there is some risk involved and there isn't that much visibility since this is quite a new endeavor for Koei Tecmo. So we believe there will be some positivity and expectation, but it won't be fully discounted until they can actually prove that they can do this. So we actually feel that near-term momentum for Koei Tecmo continues to be positive. One further positive is that the Samokshi Senrekuban title will also be released in South Korea and Taiwan in the first quarter. This will also help support earnings, but the reason that we're turning less positive on Koei Tecmo is simply because the potential earnings uplift from a lot of these new initiatives, aside from the 5 million unit title, is likely to be quite incremental, and therefore the growth rates will be coming down significantly, and therefore we feel that there is some risk that investors who have made 100-150% in the stock could choose to take profits, because it could be 6 to 12 months before we see any significant movement. The one upside risk is that they do announce the 5 million unit seller and announce more details. If that is taken positively by the market, we feel that there is more upside. But barring that case, we feel that there is some risk of profit taking. So we're not outright negative on the stock, but we do feel that there's a lot of potential for the stock to take a breather. So we feel that it's done very well, but we would be looking for alternatives at this point. And we think the most attractive alternative is actually Capcom. So Capcom hasn't particularly underperformed Koei Tecmo over the last several years. They've had some big successes. They released Monster Hunter World, which is an IP that they've had success with, particularly on handhelds. But Monster Hunter World was released across PC, PlayStation, and Xbox, and the title has now sold over 20 million units, including an Iceborne expansion pack. So that's an extremely high number for Capcom, and it does change the nature of the company in terms of the number of stellar IPs that it has. Resident Evil was probably the biggest and most well-known IP for the company prior to that, and even with that title, Capcom has actually made some significant strides. The series has had its ups and downs. It was essentially soft-booted with Resident Evil 7, where prior to that they had maybe been moving towards more of a first-person shooter type style due to the popularity of that genre, but with Resident Evil 7 they returned much more to a horror shooter genre, and that was received very well. Following that up, they actually released a remake of Resident Evil 2, which was one of the more popular titles in this series. And as we mentioned, that has done extremely well on PC as well as PlayStation and Xbox, and it continues to sell well, which is what is helping prop up profitability. Following that, they also released a remake of Resident Evil 3. The original title was not one of the more popular ones in the series. And similarly, the remake also did not perform quite as well as Resident Evil 2. But one thing that we would note is that Capcom appears to have taken community feedback to heart and has addressed some of the issues that customers had with Resident Evil 3 and has also shifted development to focus more on in-house teams, whereas some of the work for Resident Evil 3 remake was shifted to another team. So we think that is a positive development. But what we're really positive on with Capcom is the outlook for about the next 2 quarters. So one title that we highlighted and that we've been talking about a lot is Monster Hunter Rise. This is a follow-up to Monster Hunter World, but it will be released on Nintendo Switch. We have extremely high expectations for this title. We've been tracking it quite closely in terms of looking at reviews as well as just opinions of a lot of social media influencers and looking at interesting techniques or abilities that have been made available in this title which weren't in previous titles. So expectations seem to be extremely high among the community. It's generally regarded as having extremely high graphical quality, especially for the Switch. And we would actually note that we feel Nintendo is actually all in behind the title, because we feel that if Nintendo can show that third-party titles can be true blockbusters on the Switch, third-party support for the platform will increase significantly. And we think Nintendo is betting big on Monster Hunter Rise. So one of the reasons for that is they've actually revamped their online multiplayer system for Monster Hunter Rise. It's all new. The system was something like 10 years old, but they've released a new system which the Monster Hunter Rise demo is actually trialing, and so far the feedback has been extremely positive on this. In addition, we believe that Nintendo will be releasing an upgraded version of the Switch. We think they've refrained from making any announcements about this until now, and partly we feel this is probably because they don't want to steal the thunder of Monster Hunter Rise. We believe the plan is to have Monster Hunter Rise be a system seller and also be a proof of concept or demonstration to other third-party publishers of exactly how much profit can be made on the Switch if done properly. That title will be releasing on March 26th, so this quarter. We believe it could sell 10 to 20 million units. We don't think that's being priced in even at the low end by the market yet. It would be an extremely high number, especially considering that this is only being sold on the Switch, but we do feel that in terms of quality, it's not entirely uncomparable to Animal Crossing, which, as we mentioned, has sold 30 million units. So we have extremely high expectations for this, and we think the potential for a large upside surprise is quite high. Once you get past that, in the quarter after it, Capcom will be releasing the next iteration of Resident Evil 8. This is also being previewed extremely positively. And internal opinion on the title also seems to be extremely high. We believe that this title could be one of the better selling titles in the series and will probably be regarded by customers also as one of the highest quality titles. To have 2 titles of this caliber coming out within 1 quarter of each other is extremely rare for Capcom, and therefore we believe the next 3 to 4 months will see extremely strong momentum in terms of earnings, and that hasn't been reflected in the stock price yet, but we believe it will be. Looking a little bit further out from there, 2022 we expect the launch of Street Fighter 6. This title has been delayed a little bit as well, and this is Capcom's big hope for developing a strong esports title. There was an intent to have a collaborative effort with the Intel Extreme series, which was going to have a mini esports tournament alongside the Olympics. Since the Olympics have been delayed, we haven't been able to determine yet whether they'll actually be doing that if the Olympics are held this year, but that is one possibility. After that, probably in 2023, we expect Capcom to have a remake of Resident Evil 4. This title is generally regarded even more highly than Resident Evil 2, which has generated significant profit for the company. So we believe the overall pipeline looks extremely strong, although there will be a very short, sharp peak within the next 3 to 4 months. So we feel there's a possibility of the stock price having a sharp run up and then possibly deflating, just simply because the first quarter of next fiscal year, could be just truly historical for Capcom in terms of operating profit generation. So that's why short term, this is by far our highest conviction long. So to sum up, Koei Tecmo we first looked at in November 2019, just after the release of the Alibaba collaborative title. It's up about 160% since then. It's starting to look quite expensive though. We think consensus is still too conservative, but on consensus numbers it's 33.5 times PE. On our numbers it's closer to 26 times, but that's still on the more expensive end of things. So we do see some downside risk for the name unless they have a really strong announcement for the 5 million seller title that they have planned. So in this name, we would be looking to start taking profit. And we believe that, on the other hand, Capcom is still a buy. That may change in about 3 months, depending on exactly how expectations trend. But we think that Monster Hunter Rise and Resident Evil 8 are going to be extremely big titles for the Switch and for the PS5 respectively. And we think that profit generation this quarter as well as next quarter, you're probably going to see 2 straight all-time highs, and the increases could be quite significant. For Monster Hunter Rise, as we mentioned, we think it could sell anywhere from 10 to 20 million units over the lifetime. And Nintendo is backing it very strongly. They actually have a Monster Hunter Rise version of the Switch hardware that will be sold with the software as well. And then following that, you'll have Resident Evil 8. One thing to note is that to shift volumes, Capcom's actually chosen not to hike the price of the title from $60 to $70. Most games are seeing a hike to $70 for the new PS5 and Xbox Series systems, compared to $60 typically for the PS4 and the Xbox One. So that should help volumes as well. And we think that, the combination of those two games is going to have a very dramatic impact on Capcom earnings. So we think it is looking like an extremely attractive name for the next 3 months. And we will wrap it up there. If there are any questions, Michael, we'd be happy to take them.
Thank you very much for this, Mio. That was quite thorough. I actually have a couple of questions from the audience here. And I'll start with the first one. Could you speak to valuations and whether the stock can hold at these levels, or are there other better value names in Japanese gaming?
So if the main concern is on the valuation side, even Capcom is looking slightly more expensive. On our numbers for fiscal year March 22, we think Capcom actually could be under 20 times, but we think that the operating profit generation could be 50 to 60 billion yen. Consensus is actually close just under 40 billion. So we think that there's an extremely large gap in terms of expectations for unit volumes for Monster Hunter Rise as well as Resident Evil 8. I mean, my honest opinion is that the sell side does a very poor job of forecasting hit-based business models. And for gaming in particular, I think it is quite difficult to forecast using traditional methods that analysts use. I don't think any analyst was really expecting the big increase in unit volumes for Hyrule Warriors, whereas we flagged it quite early, I think. And I think it's simply because a lot of the times they just look at what historical titles in the series have done, and they might look at the installed base of the system it's going to sell on. But there's a lot more to it than that. You kind of have to actually look at the games. And in a lot of cases, the analysts aren't people who've been playing games or anything like that, and I don't think they totally understand them. So I feel that we have a better grasp of, what the potential is. There's still a lot of variability, obviously, and, even our forecasts or expectations aren't hugely accurate. But I think in terms of having a sense of exactly how high or how much a game could potentially sell, or exactly how much anticipation there is for it, I think that, actually looking at the games, reading through, gaming forums and things like that is extremely important to actually have a grasp of this. And I don't feel that most analysts do this enough. So that's why I think that there's probably still a lack of appreciation in terms of exactly how strong these titles may be. I'm partly answering the next question as well in terms of why do you think the market hasn't priced in Monster Hunter Rise and RE8 yet?
I was going to say, it seems like you're addressing that as well by pointing out this very obvious gap in analyst coverage.
Yeah, so one possible reason is just that partly the sell side actually takes a lot of its guidance from what the company says. And even when we speak to Capcom, they kind of play down Monster Hunter Rise, saying that, since it's only releasing on the Switch rather than the PC and the PlayStation and Xbox, they obviously have high expectations for it, but they don't expect it to sell on the same level as Monster Hunter World. But I think they're just being conservative and playing down expectations. I don't buy it at all. So the big change for Monster Hunter World was just that Monster Hunter was always an extremely popular title within Japan, but Monster Hunter World actually blew that out to the entire world. And the Switch is also something which is globally popular. Most people have this impression of Nintendo as also being globally popular, and that's kind of true, but it's more true with the Switch, especially in Europe. So they've had pretty unprecedented success in Europe with the Switch. That always used to be a Sony stronghold. And just given how many units the Switch has sold, it's not going to be difficult for 15% of Switch owners to buy Monster Hunter Rise. We don't feel that in terms of penetration rate, that's all that high. When Animal Crossing released, the Switch installed base was under 15 million units. Under 50 million units. It still sold 30 million. The Switch installed base is now over 70 million units. We don't think 10 million for Monster Hunter Rise is particularly aggressive at all. 20 million might be a little bit aggressive because there is a little bit of a gap in terms of the overall development capability of Capcom and Nintendo, but it's not as huge as people might imagine, and Monster Hunter Rise is an extremely good-looking game. So, yeah, we just think that what's happening is simply that Capcom is communicating things in a downbeat manner, and that's flowing through the sell side to the buy side, and probably people look at them as strong titles, but not as potentially unprecedented titles. And so, to make a call that something's going to sell unprecedentedly well is obviously quite aggressive. And we're not saying they definitely will, but we see a lot of potential there. Monster Hunter Rise has more potential in our view, but Resident Evil 8, it's another attractive title, and we've been tracking it for a long time as well, in terms of exactly what the game does. Even in terms of length, most of the leaks and rumors out regarding the game suggest that in terms of length, it's going to be similar to Resident Evil 4. And that they've actually taken a lot of cues from Resident Evil 4. And so that's also building a lot of anticipation. Initial response to the demo trailers has also been extremely positive. It's trended relatively well on social media. So as a title in the series, we think it'll do extremely well. And we actually think the decision not to price it relatively cheaply is actually quite a good one for Capcom, because they already made extremely high margins on it. And if it undercuts other strong titles, especially at a time of the year when you don't have a massive number of big releases. And the PlayStation 5 is obviously selling extremely well, but it's early in its life. The timing is actually quite good, even though the installed base is quite low. So we think that that title is another one which has extremely strong prospects. The only real negative is just that obviously if it had released in the third year of the PlayStation 5's life, it would likely have sold a lot more. So yeah, that's why we think the market hasn't really priced these things in yet. And sorry, in terms of the next question about game companies in Japan usually being conservative on how many titles they expect to sell, I think that's probably true of game companies globally, simply because like almost every company we speak to, if you ask them whether they can predict which titles are going to sell really well and which titles won't, they have some idea, especially if it's an established IP, but it's quite hit or miss even for them. And so there's quite a large range, and I'm sure Capcom also recognizes that Monster Hunter Rise, if everything goes well, could potentially even sell 20 million units, but they're never going to forecast that. And even 10 million units, I think, would be quite aggressive for them to do. Their internal forecasts, if I had a guess, might be based on something like 5 million units, which is still decent, but obviously there's an enormous gap there in terms of profitability, especially because once all the development costs are amortized, about 70% of the sticker price is basically profit. That's why we think there's a lot of potential here, and why Capcom, if you look at consensus, is expensive, but if things go as we expect, it's still not ridiculously cheap, but at about 18 times for this sector we feel is extremely reasonable, and from there we think maybe 30% upside to 25 times probably gets it to a multiple that's a little bit pricey maybe, but on the reasonable end of that. So yeah, to get back to the first question actually, regarding valuations. So the reason that Sony is our top pick for this year is that it is slightly more reasonably priced. It's also under 20 times on our numbers, but we feel that when you talk about valuation, you're talking about consensus numbers. It's more likely to come down under 20 times consensus numbers as the year goes on, because we feel that the sell side probably will catch up more quickly to that, and it won't be sort of like a sudden change where Monster Hunter Rise initial sales numbers come out and then everybody has to revise or anything like that. We think there'll be a gradual increase over the year as PlayStation 5 sells through and as new titles are announced for the system. And at the same time, the number of PlayStation Plus subscribers will grow. So we think that should see more steady recognition, and consensus estimates should go up much more steadily. So the name should probably remain sort of more reasonably looking valuations. But yeah, I think it's a bit difficult to find good value names within the sector which have strong current momentum. In terms of some names which could start to build momentum over time, we would flag Square Enix and Konami. So Square Enix the share price hasn't really done as well as its peers, but they do have a refresh of their online multiplayer Final Fantasy game, which was just announced. And then Final Fantasy 16 at some point will be announced for the PlayStation 5. It will be one of the biggest titles for the PS5, and so Sony is likely to support that title as well. So we have high expectations for that. Square Enix, I believe, should be around 17 times-ish. Sorry, I haven't checked very recently, but the valuations are likely to look more reasonable, and likely to look more reasonable still as earnings estimates go up. We feel that they've done an extremely good job with mobile gaming as well as with their online multiplayer game in terms of profitability, and they've also done well with merchandising. they have an extremely strong profit structure for everything except these sort of package games. And if they can address that by developing a strong business model where they can continue to release Final Fantasy, Dragon Quest, and Kingdom Hearts games on a regular schedule, potentially having more remakes as well, then you could start to see some extremely strong profit generation from them. So if you're looking for a value name which has underperformed a little bit and could perhaps have less downside in case things go wrong, we like Square Enix. It's always been sort of our fifth pick after Koei Tecmo, Capcom, Nintendo, and Sony. But we think that this year it could actually move up into the outperforming category. The other name to look at is Konami. So Konami was actually a strong underperformer for much of last year, but it's been recovering more lately and actually outperforming. For Konami, there are a lot of rumors that Sony has signed up exclusives of their Silent Hill and Metal Gear Solid IPs. These aren't confirmed yet, but the leakers are relatively reliable and we believe these will happen. So similar to Square Enix, Konami has generally been doing well on the mobile gaming side, but their package gaming has been lackluster, especially since they had a breakup with the famous developer Hideo Kojima. It seems like that tussle could be over, potentially with Sony's intervention as well. But if they have signed up exclusives for Silent Hill and Metal Gear Solid, those will boost Konami's profits significantly in terms of their package gaming side. So we would expect announcements on these to come out within the next 3 months or so. But that's a name that we're still not entirely convinced on, but it's one that we are watching. So yeah, we still remain quite positive on the sector, but the names that we favor are changing quite significantly. So yeah, sorry, that was my answer to the first question in the wrong order.
So there you have it. That's about all the time that we have today. Thank you, Mio, and thank you everyone for your questions and for being with us today. Mio is available for bespoke research requests or premium services, so please contact your Smartkarma account manager in this regard. And if you have any other questions, please email us at research@smartkarma.com. Thank you, Mio, very much once again.
Thanks, Mike.